Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Well, with that DNC underway, Vonnie Quinn joins us, Bloomberg U.S. TV correspondent, who has been taking a closer look. So it's fair to say, I think, that the Democrats appear pretty rejuvenated here and pretty excited about the prospects of Kamala Harris. But you also hear a lot of mention of Donald Trump. It seems that they're definitely looking at using that as a lever to get people to vote for Kamala Harris. What have you noticed today that stands out?
For sure, Brian. Well, we actually had a surprise appearance from Kamala Harris tonight. We weren't expecting her to take to the DNC stage until Thursday when she formally accepts the nomination. But she did speak for about 2 minutes, really just pressing ahead to President Joe Biden. Speaking later, she made some remarks and obviously gave her campaign cry, "When we fight, we win." But it was interesting to see who has been taking to the stage, because we had union representatives, politicians, including right now progressive Alexandria Ocasio-Cortez is on the stage, and we also expect to hear from Secretary of State, formerly Hillary Clinton. Alexandria Ocasio-Cortez made mention of Gaza, which was interesting because this is one of the areas where Kamala Harris is really hoping to bring back voters to the Democratic Party. AOC said that she was working tirelessly for a ceasefire and to bring back the hostages. Now, she didn't go beyond that, and we know that there are thousands of demonstrators in Chicago right now, some of them trying to disrupt the convention because they want to know what exactly Kamala Harris would do differently from President Joe Biden, given that so far all she has done is offer a sympathetic ear to pro-Palestinian protesters and that vote. So that's one of the things that stood out to me for sure.
Well, as you mentioned, we are waiting to hear from President Biden. Interesting that we're hearing from a sitting president on day one of the convention, and also that his advisors are pushing back pretty strongly that this speech is not a swan song. What is it?
Yes, it's definitely going to push forward as well, right? Biden wants to keep the emphasis on what comes next. He also doesn't want to write himself off. He has 5 more months in which he wants to do some important work, including hopefully getting a ceasefire in Gaza and also continuing to campaign. So the theme for Monday night is for the people, and that will jive very nicely with what he intends to speak about, which is likely how he and his administration, including Kamala Harris, brought the U.S. economy back from the pandemic, also passed legislation on infrastructure and climate, and protected democracy. Now, this last has been so important to Biden during his own campaigning for several months and even post him dropping off the ticket. So we expect to hear a lot of comments about democracy. And then it's interesting to note that Biden will then leave. He'll have passed the baton to Kamala Harris and he'll leave to go on vacation just for a short period, going to the West Coast, California, where you are, I believe, Brian, right now. And he will leave the stage to Kamala Harris. Of course, he will be getting back to his own important work as President of the United States following that vacation.
We should talk a little bit about some of the key policy points that will eventually come from Kamala Harris. She wants to expand child tax credits, and she wants to offer more incentives for home buyers, trying to reduce the cost of food and prescription drugs. And she's made a really big point about cracking down on price gouging. And what some investors and some critics are saying is that really what she's talking about is fixing prices, and that doesn't ring too well with people who are perhaps independents or in the middle. And then she also quite closely with Donald Trump wants to exempt tips from federal taxes. So far today, have we heard a lot about issues, or is it more about the difference between a Kamala Harris presidency and a Donald Trump one?
Actually, so far today, we've just heard a lot of rallying cries, right? And the idea that, you know, we all love our country, we need to fight for our values, and, you know, if we know what to fight for, we can fight. So there's been a lot of, you know, tonal rhetoric, let's say, but not a lot on policy. Now, outside the convention, in various ways, we have been hearing a little bit more about policy. For example, Reuters did an interview with Donald Trump, who's been on the campaign trail in the swing states and managed to get from him that he would consider doing something on housing as well. It was seemingly a response to what Kamala Harris has said she will do on housing. And NBC also reporting that Kamala Harris will propose a corporate tax of 28%. So that would be the first revenue-raising policy that we've heard from the Harris campaign. But yes, certainly on the stage, I would expect less policy and more, celebratory rhetoric and rallying cries. And we should hear a little bit more about policy perhaps off the stage.
Yeah, to that point, Vonnie, the convention does suck up a lot of oxygen around the news agenda. What is the Trump campaign doing while this is going on?
The Trump campaign has been trying to suck some of that oxygen away, actually, from the Harris DNC. President Trump has been touring a factory in Pennsylvania. He's been offering interviews. Reuters reporting that he's been talking about Elon Musk, for example, that he would be happy to offer him a cabinet post if he were to be elected, or indeed an advisory role in the White House. And that he's also considering ending $7,500 tax credits for EV purchases. Not sure how the two fit together, but that he hasn't made a decision on it. So Donald Trump is definitely trying to keep himself at least in the headlines. He goes to Michigan tomorrow, and of course on Thursday, the day that is really Kamala Harris's to accept the nomination, he will be at the border in Arizona, and he's going to be hammering home the fact that that's one of her frailties.
All right, Vonnie, as usual, quite professional, and nice to have you with us here on the program. We always love to have you with us. Vonnie Quinn, Bloomberg US TV correspondent. Jay Hatfield, CIO at Infrastructure Capital Management, for a closer look at markets. So, Jay, is this a grind higher in risk assets or a breakout?
Thanks, Brian, for having me on. Well, we've been hyper bullish really all year. We started with a 5,500 target on the S&P. Now we have a 6,000 target. And we actually became incrementally bullish when there was the growth scare combined with the blow up in Japan. Because what was bullish is that rates dropped significantly. They're still below 390. And that was the part of our call that was at risk. Because there's a lot of bond bears who focus, we think, too much on the U.S. budget deficit and not enough on monetary policy. So it became clear that if the Fed cuts, rates are going lower, and that's really required. To have a justified 6,000 target, you really need rates at 350 or below. So that's a 21 multiple. That implies really 350 to 3.25 on the 10-year. So we're not surprised we're grinding higher. We have a lot of positive catalysts we don't normally have during the fall. Whether there's another freak out, we can't really predict, but we're sticking to our 6,000 target.
Clearly, investors see a lot of positivity, but so many things could go wrong. Powell could surprise us. He may not feel comfortable with the rally in risk assets. Nvidia could stumble. That's coming up on August 28th. Hamas might not accept a ceasefire deal, and Iran could launch a major strike on Israel. I mean, I know you know this. Everybody knows it. But doesn't it pay to hedge here?
Well, certainly. I mean, we're getting close to all-time highs, so it's a good time of year to be a little bit cautious. Our call is for a fourth quarter rally, so we're not saying we're going to get to 6,000, by the end of the week. And normally you pull back. We already did it once. We could easily go down to 5,000. We think there's good support there, and we concur that with your skepticism about the Fed, they operate as if their third mandate is to be behind the curve. And so it would not be totally shocking if they pause yet again, but they certainly shouldn't. There's evidence of a slowdown. Our forecast is if they don't cut, we'll have a recession in 25.
Yeah, and I suppose if you don't overthink it, you just look at this kind of situation where you have a Fed cutting interest rates into an economy that does not seem to be stumbling. That's kind of a winning formula.
Absolutely. And we also think that there'll be a rally when the election is resolved. Our call is for divided government. It seems that the Senate is going to go to the Republicans just because the math is overwhelming for them. Probably the House, the Democrats. virtually impossible to call the presidential. But divided government is really good for the market as well. So we see all the inflection points, even the ones you mentioned, as ultimately ending up positive. And that's why we're comfortable with our 6,000 target.
If there were to be a sweep, many think that it might be more likely to be a Republican sweep. But in any case, in either direction, if there was a sweep, does that bring that deficit blowout that you talked about as somewhat fictitious into more of a reality?
No question that divided government means that the opposing party opposes all spending proposed by the dominant party. And we've seen that over the last, although for 2 years, technically, the Democrats were in charge, but Manchin and Sinema blocked excessive spending. So that's a concern. There's also another concern that's unique to this year, or next year, really. And that is, if there's a Democratic sweep, there almost certainly will be a significant corporate tax increase. And regardless of your political outlook, that is unambiguously bad for the stock market. So we would drop our target by about 20% if that occurred, if we really got a 28% tax rate, which seemed likely. So we see that as a risk. And we also, as you're implying, it's not really that great if we have a Republican sweep and we spend too much money on defense and just cut taxes and run huge deficits.
Yeah, Democrats appear pretty rejuvenated here and seem to be rather excited about the prospects of Kamala Harris. But it'll be today, I think, that President Biden looks back and looks, to his own legacy. And we'll talk a lot about that. And it might suggest there's a little bit of discord over the way the president was sidelined by some of the heavyweights like Barack Obama, Nancy Pelosi and such. I got to ask you a little bit about politics given the day and the fact that President Biden will be speaking. And by the way, we'll be carrying that and wrapping up the speech a little bit later on here on the network. But I want to get your take on whether or not you think that Democrats are united or divided.
Well, they have one element that is really kind of argues against all the divided arguments. And I don't know if you've heard of him. His name is Donald Trump. So that absolutely is going to, and already has really unified the Democratic Party. They did what they had to do to get a more credible candidate. Seems like so far it's working. And the Trump administration so far, or Trump really himself, seems to be situation normal, completely disorganized campaign, off message, picked a vice presidential candidate that does not broaden the base. If anything, it narrows it. So, yep. We just look at the gambling odds, favors Kamala. That's kind of our base case. Yeah. But it's a turnout election, so we won't know till we know.
Yeah, absolutely. Well, I should stay in my lane here and get you back to markets. Give me your number one theme to play at the moment.
Well, we do think the rates are going lower, which is less of a non-consensus call than it was at the beginning of the year. And if that occurs, that favors the interest-sensitive sectors. And these are sectors that have been beaten down during this Fed tightening cycle. Yeah. So we're strongly recommending financials and REITs. And that also includes small caps because they're dominated by financial and REITs.
Yeah. All right, Jay. Very good. Thank you very much for joining us here. Jay Hatfield there, CIO at Infrastructure Capital Management. Mary Nicola, M-LIV strategist, with us live here on the program. So a lot of deals here of late, Mary, a softer tone at the Fed. You've got a rebound of some of the mega cap tech stocks and also a broadening out of the marketplace and a weaker dollar. So there's a lot to like, but does it continue?
Yeah, I think for now it does, and largely has to do with the fact that you've got a soft landing narrative that's really come through. So the data has shown that the U.S. economy is actually holding up. It's not doing as bad as what was initially thought of when we saw the jobs report in early August. So the narrative has changed. It has shown that the U.S. economy is resilient, inflation is softening, so playing and feeding into that soft landing narrative. So giving the likes of the equity rally a little bit more of a boost, and giving things like Asian currencies another strong rebound and another lift higher as a result. So for now, and then obviously once the Fed reconfirms that the easing is on its way, that should really continue.
Yeah, does soft landing necessarily mean easing, though? Because how is growth looking? And is there this disconnect again between what the markets are expecting and what Jay Powell might end up delivering?
I mean, the fact is the market is pricing in something very aggressive, in my view, in terms of highlighting the fact that there's going to be a cut almost every meeting from then on. I think what the Fed is likely to take, or the approach that they're likely to take, is more of what we've been hearing from global central banks, which they start cutting, or they do their first cut and they become more data dependent. So right now, and one of the key things that some of the Fed officials have highlighted is that keeping rates at the current level means that the economy is overheating. Obviously, we know that the economy is not overheating. We're seeing some softness coming through. That takes them out of restrictive policy. So you move more towards normalizing rather than easing. And I think that message is likely to be emphasized at Jackson Hole.
Interesting to see what he hints about in terms of the pace of additional cuts. I think everybody kind of feels now that September is likely on the way. That would surprise the markets, and you'd probably see a negative reaction. But there's enough other good things happening that perhaps it would pass. But people will calibrate, what's coming up next. What do you see as the natural pace into 2025?
Yeah, I think what you do see is a gradual pace of, so you see a start of a cut in September, then but I don't think a 25 basis point cut is guaranteed for every consecutive meeting thereafter, and even to a jumbo rate cut unless you see a deterioration in the market. And so that emphasis on data dependency is likely to linger. It's something that we've heard from the ECB, from the Bank of England, and that's unlikely to change with the Fed as well. So you're likely to see some of what the swap market is pricing in, and some what traders are pricing in, to be repealed a little bit and pared back. And that will bring some upset into the market. But at the same time, we've seen large sways in Fed pricing over the past year, where we've gone from starting the year with almost 7 basis points of cuts heading into 2024. Then we went down to almost 2 and even closer to 1 at one point. So I think these sways will remain, especially if the Fed doesn't give some clear forward guidance of what is the pace likely to do, and that's going to resonate, is the fact that we don't get clear forward guidance and we still rely on data dependence.
Well, dollar weakness in this environment seems to be emerging as a theme. We've got the Bloomberg Dollar Spot Index off about 2% in the past month, and that's causing some interesting moves in the yen. It went on quite the journey yesterday, didn't it? We broke through 148. Now we're just above 146. Is yen strength now an entrenched narrative, or is that too early to say?
Yeah, absolutely. I think that's one of the things, is that every day it becomes all eyes on the yen, and that's not likely to change. So obviously the Fed's soft landing narrative helps assuage some of the concerns in the market. So let's say you don't get as much of a ruckus or disruption with a yen strength as you did before as a result. But I think the BOJ has let that normalizing genie out of the bottle, and so we're looking for more further normalization of rates. But I think one of the key things that Ueda will say when he speaks to the Diet on Friday is the fact that when he continues with his path towards normalization, that obviously market conditions will matter, and I think that's going to placate a lot of the nerves that are in the market. So you still see continued yen strength, but just not at the accelerated pace that we've seen over the last month.
So dollar yen, not unnerving markets now. We have a few other negative developments that could emerge. We mentioned that Powell might surprise us. Nvidia could stumble. Hamas might not even sniff at that ceasefire that Israel has agreed to. And Iran, of course, could get pretty aggressive against Israel. Any of those, do you think, potential major stumbling points for the market?
I think the major one will probably be Nvidia, especially because we've seen such a strong rally in equity markets and that equity market comeback. And so Nvidia is probably the key thing that's going to, especially since the Magnificent Seven companies, we've seen that the results, the earnings so far for this quarter have been mixed. So it's really up to Nvidia to carry through and justify those high valuations, even though we've seen a market improvement in company earnings, ex-Magnificent Seven, but it really will come down to Nvidia showing us that, the valuations and the expensive valuations for equity markets make sense. So it's really going to be all about Nvidia.
In terms of markets, let's take a look at the Nikkei rallying pretty hard despite the yen strengthening. What's going on with the carry trade now? Can we even unpick that?
Yeah, I think that carry trade, there's obviously a lot of, we've seen such an aggressive unwind in the carry trade over the last month. And I think a lot of it was really snowballed by the fears of a recession. When you have a combination of weak U.S. growth, slow China economy, you wonder, where is emerging market growth going to come from? And that really becomes the key sticking point for emerging markets. And why would you even hold a carry trade if that environment continues? The key thing, what we've seen for carry trades is the fact that equity markets make a comeback.
Yeah. All right, Mary, thank you for joining us. Mary Nicola, M-LIV strategist. This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.